Hello there, how are you doing? Hope that you are doing well. I am in a new location. I recently started a new job and I am doing this video from one of the offices in my new firm rather than in the room surrounded by books and video games and everything else that's about to collapse on me. Don't worry, that background will return from time to time when I am at home recording videos, but I want to get something out on a big story which I think is really the biggest Hong Kong related story we would have in September. And it relates to cryptocurrency. Now, if you watch my last few videos, they've been very much focused on artificial intelligence and data privacy. And cryptocurrency has kind of been on the back burner. After what happened with FTX, after various scandals involving cryptocurrency, people have been, I guess, more wary to invest in tokenization platforms, whether it's things relating to the NFTs or in crypto itself. But the world is still there. Cryptocurrency is still very much a thing. It's not performing the way it used to. It may not be in the public eye as much as it used to, but it's still one of those things where I don't think it will ever go away. However, I've always talked about regulation, how regulation of crypto is the thing that will make it viable for larger markets and actually gain acceptance across the globe. At the same time, we've got obviously states trying to get their own token platforms where they have digital currency. But I think if cryptocurrencies are going to succeed, then they need some regulation in place. And months ago now, it feels like it was forever ago, the Securities and Futures Commission here in Hong Kong put in rules where if you were a virtual asset trading platform, that's essentially a cryptocurrency exchange, anyone who essentially sells cryptocurrency to investors, to the public, you needed to have a license. And this license actually wasn't, the application process wasn't that big a deal, having read through it. You're essentially making sure you've got responsible people in place, that people have got monitoring what's going on, essentially protecting consumers. Now, the reason I mention protecting consumers is that Hong Kong has had a bit of a history of having to step in and make sure that consumer investors, I suppose, are protected when something goes wrong. I've been in Hong Kong a very long time. I'm sure I've said that before on one of my videos. One of the things that I've learned is that investors here are very, I won't say risk averse, perhaps sometimes a bit blind to some of the risks of investing. And they think that something is very good because they've been told by a friend, or they've seen some very glitzy ads being shown. And essentially they think, well, I'm going to invest too, I'm going to join the bandwagon. We saw that a lot with NFTs in Hong Kong. We sort of got a lot with ICOs in Hong Kong, if you remember that far back. We've also seen it very much in the cryptocurrency space. And people have been burned, but I would say, in terms of a location, Hong Kong probably has more crypto investors per head than a lot of developed places that are actually doing a lot in the crypto space. We still have crypto exchanges on the streets. You go to something like Coiner and buy crypto over the counter or do trading. Now, what I want to talk about is an exchange called JPEX. Now I guess they started with a bit of a bang, a very, very glitzy series of marketing campaigns. They were spending a lot of money. There were posters everywhere, invest in JPEX, make sure that you use us as your preferred crypto platform. It felt like the things that had gone wrong with FTX had all been forgotten and people were actually into JPEX again, well, into exchanges again because of JPEX. They hired lots of influencers. You had social media ads essentially promoting JPEX and all they do. And I feel like they convinced investors that this was a thing, that this is a safe exchange. It's based in Hong Kong. It's something that well, let's put it this way, it's something that you don't want to miss out on. I often feel like FOMO, the fear of missing out, some of these investment platforms rely upon. But things have gone very, very wrong now for JPEX. So it all happened in September. There have been concerns that maybe JPEX had some issues, and the Securities and Futures Commission actually accused them of misleading practices, of doing something that essentially wasn't right. On September the 13th, which happened to be the same day as the first day of Token 2049, which was a token conference in Singapore. So whilst this statement went out, and if you go to JPEX's website, and I'll put this up on screen if it hasn't been removed by the time I'm going to edit this video, they gave a statement saying they don't agree with any of this, and actually now they're reconsidering whether they should even be licensed in Hong Kong because they don't have their license yet, but they made the application, which is a bit of a red flag. People are arrested. I believe the arrests at the time I'm recording this are up to 10, but also the police now are investigating social media influencers, those who helped advertise JPEX. It's become, well, in theory, potentially one of the biggest investment scandals that Hong Kong has seen for a very, very long time. Some of the hyperbole in terms of essentially something ever, but we'll see about that. I'm not sure. We'll see how it all ends up. But anyway, the way that JPEX have responded is quite interesting. So they were very worried about capital flight from their platform, which we saw with FTX. There was arguments that Binance's involvement when it was saying something's not going right was what led to FTX then having capital flight, and also FTX essentially collapsing because something was very, very wrong there. Now, with this one, what bizarrely JPEX did said, right, we're going to stop capital flight by making the withdrawal fees, if you want to withdraw your crypto from our platform, so high, I think it went up to 999 USDT, that it wouldn't be viable to do so. Meanwhile, the platform is essentially, although it's stating it's still operating, nobody in their right mind probably wants to put any money in it, and nobody in their right mind can probably get money out. So it's a mess, and we'll see how it pairs out, how it goes. Given that the SFC is involved, since the regulator is involved, this is going to be the first really high-profile case where a cryptocurrency exchange faces scrutiny in Hong Kong, and it's going to make or break the market. And that, rather than talk about JPEX, is what I want to give my opinion on. So we've seen lots, as I said earlier, there's lots of investors have been scammed in Hong Kong. I have had clients who've fallen for people just phoning them up saying, you will make an absolute fortune investing in this, can you send me some Bitcoin? And people just seem willing to believe statements that something will be or will be a better, too good to be true investment. I'm obviously, because I'm a lawyer, a terrible, terrible cynic, so don't believe in that. But JPEX really thrived on that and really had this marketing that made people think, well, this would be a very, very safe platform. And the view that I just read in a newspaper says, well, this could be the end of Hong Kong as a crypto base, because essentially investor stability, investor confidence and stability in the market will have gone so far in the wrong direction that it will kill it off. And with the SFC rules, with the SFC essentially controls and licensing regime, nobody will ever want to open a cryptocurrency exchange, and no consumer, no investor will ever want to actually put money into them. And actually, I think that's nonsense. So I think actually this is a good thing. Hong Kong wants to build itself as a virtual asset trading hub. Remember that Hong Kong, we are very much just a few miles away from where I'm sitting now, a few miles away from the border of China, where cryptocurrency is heavily regulated indeed. Here it is to an extent, but not so much. But it does have the ambitions to be this crypto hub, and I think by showing it as a safe haven for investment, it can. It all reminds me of what was going on when China was essentially closed and Hong Kong was the gateway to China. In a similar way, Hong Kong be the gateway for China for cryptocurrency too. But actually having a strong regulatory presence, having the fact that not only do we have virtual asset trading platform licensing regime in place, but that the regulator will take strong action, I think will increase confidence eventually in the long run as to whether Hong Kong can succeed and actually will help our cryptocurrency market. Now, I've always wondered whether crypto is not dying, but certainly not in a good place. But I do think that this is the sort of steps we need. I actually think the FTX thing is a good thing to show that there will be some oversight in the future, and then it can be respected as an investment tool, as a viable potential currency. And that's my view. I feel like the wild west of crypto has long gone. It kind of existed for a while still in Hong Kong. Certainly did with NFTs, which often baffled me, and I wonder how much some of these NFTs end up being worth. Though there are still companies giving them out and trying to get you to invest them here as we speak. But in terms of crypto itself, I feel like if the SFC continues to show a strong hand, if these arrests, which are very public, come to fruition, if some of the influencers who've been convincing people to invest, which could be seen as essentially marketing and advertising investments, if they face some sort of penalty too, I actually think there'll be more confidence in the market. We will see. That's it for the moment. I hope that you're interested. Let me know if you've been affected by JPEX or you are wondering what will happen to the investments you have. I know they are sitting on a vast fortune of investments at the moment, which are very hard to withdraw. They're going through various referendums on whether to convert assets to other assets, decide what to do, whether investors will get any money back. We will see. And also, of course, JPEX are threatening to just pull out of Hong Kong completely and go elsewhere. But I wonder whether the people involved will be able to do that, because whether they will actually be facing some sort of criminal charges or may find themselves in jail, in which case perhaps JPEX will collapse and maybe someone like Binance will step in. But that's all pure conjecture. I have no information on that, so we will see. Anyway, as I said, that's it for the moment. Great to see you. I'll be back soon with another video, whatever exciting is happening in the world of tech and law in the future. Have a good one.